A new video made in conjunction with Value School, and I don't think it's going to leave you indifferent. Over the last decade, we have witnessed a complete technological revolution. We have seen business models grow and consolidate in completely new areas: smartphones, e-commerce, social media, and even video-on-demand platforms. New colossuses like Apple, Amazon, Facebook, Alibaba, Alphabet, Netflix, or even Tesla have become the biggest stars in the market. But here's a question for you. Can you tell me which listed company has achieved the greatest increase over the last decade? Well, take a look at this, because it's not any of the companies that I've just mentioned, and it has nothing to do with the Nasdaq or new technologies. According to data from Bloomberg, if we consider MSCI World Index companies, that is, an index that brings together medium and large capital companies in developed countries, the best performing company in the stock market is none other than a New Zealand company in the dairy sector. Yes, we have stumbled upon the Kiwis. We're talking about A2 Milk. And note that the difference is really great. A2 Milk is a fairly young company, created in 2000. Between 2010 and 2019, it has achieved an increase in the stock exchange. Are you ready for this really crazy figure? Of more than 16,000%, which is an annual return of just over 66% for an entire decade. And that's not all. Over the past 5 years, the annual profitability of its shareholders has been even higher. Between 2015 and 2019, this stock has averaged an annual return of almost 80%. In this period alone, the price of each share has gone from about 95 cents in 2015 to closing at a price of almost $18 in 2019. What's more, even the coronavirus hasn't made a dent in it. Since the beginning of the year and until the end of July, this company has reaped an increase of almost 40%. In other words, if in the summer of 2015 we decided to invest £10,000 in this New Zealand dairy company, today, just 5.5 years later, these shares would be worth more than $250,000. And if instead of waiting until 2015, we had carried out the investment earlier, let's say 2010, then we would be talking about a jackpot of more than $2 million. Specifically, about $2,727,000 to be more accurate. It's sheer madness that has made a small New Zealand company become, in just 10 years, a food giant, valued at almost $10 billion. And you know what? The best thing of all is that this company doesn't even have any cows. So what explains such a rapid rise? Are we dealing with some kind of rampant bubble in the dairy sector? How has this company achieved such success in such a basic and at the same time highly saturated market? Well, let's take a look.
A different protein.
To get to the beginning of this story, we have to go back to before the turn of the century, back to the year 1993. That year, two Kiwis, two New Zealand scientists, Bob Elliott and Coran McLachlan, who were researching diabetes and heart disease, identified milk as a possible culprit. Or rather, not all types of milk, but specifically the variety known as A1, which is the type of milk that is marketed in virtually every country in the world. Well, according to their research, this type of milk was identified as possibly leading to inflammatory processes in the digestive system, a problem experienced by approximately 25% of the population. At the same time, they also indicated that another type of milk, known as A2, may not have these harmful effects. To clarify, let's explain what these two types are. You see, we can say that all milk contains two types of protein, 18% corresponding to that part known as whey protein, and the remaining 82% to casein. In turn, we can find three types of casein, alpha, beta, and kappa. Well, the beta casein can be either type A1 or type A2. In the past, cows produced only the A2 protein, but apparently from a cell mutation that occurred about 100,000 years ago in Europe, cows began producing the A1 beta casein protein. These cows can produce more milk, making the A1 type cattle the favorites of farmers throughout the world. Since then, studies on this issue have multiplied, with results for all tastes. Yes, A1 type milk really has problems. No, it doesn't have them. Then A2 milk is better. Then it's not, etc, etc. As you can probably imagine, the conclusions have usually had a lot to do with those who sponsored the studies. However, at this point in time, it seems that the majority of scientific opinion suggests that this alleged damage from type A1 milk is unproven. This is, for example, what the European Food Safety Authority points to. But let's stop the scientific debate. The fact is that in 2000, Corin McLachlan, one of the two New Zealand scientists we mentioned earlier, partnered with entrepreneur Howard Patterson to found the A2 Milk Company with the aim of distributing milk and A2 type dairy products. And you know what? Beyond the debate about whether A2 type milk is actually better or not, the truth is that this company has effectively used the marketing of this different type of milk to consolidate a premium brand image. Something that, along with the perception that it may be easier to digest, allowed them to multiply sales in New Zealand, Australia, and also in China. Especially when they released their infant formula, a product that has had spectacular results in the Chinese market. It's a country where families are particularly concerned about the quality of milk consumed by the youngest, especially after the country's 2008 contaminated milk crisis, which caused more than 50,000 newborn children to be hospitalized. And it's here where this New Zealand company has found a way to break through. Because let's say that A2 Milk didn't want to be a typical milk distribution company, but that its goal has been to become a complete marketing company. Yes, marketing. And that's exactly what explains its stock market performance. Listen up.
A business success.
16,000% up. Are we dealing with a bubble? Well, more like a spectacular growth story. In the last 5 years alone, the company has managed to multiply its sales by almost 12 times, and in 2020 they expect a further increase of more than 30%. And it's not just about income. An increased operating profit hasn't been slow in happening either. The projections for the company's interest and pre-tax profits expected by the end of 2020 are greater than the company's entire market value was in 2015. We are talking about a company that has so far been operating in New Zealand, Australia, and China, but which has just taken on the giant US market. But at this point, the burning question is, how has this small company achieved such success? What makes this business tick? Well, you see, the most surprising thing about it is that A2 Milk is not really a food producer. That is, it is a very unusual dairy company because all of its products are manufactured by third-party suppliers. Suppliers with which the company maintains strong ties, as is the case with Synlait Milk, a New Zealand dairy company that lists A2 Milk is its second largest shareholder, controlling 20% of the shares. But we're still talking about third-party companies. As we told you before, A2 Milk is basically a distribution and marketing business. The goal of its managers is to feed demand, take care of the distribution chain, and strengthen its brand image. And this has really important advantages. For example, they don't need to invest in capital. It may be surprising, but over the past 5 years, A2 Milk has managed to increase its annual sales by more than 1.5 billion New Zealand dollars by investing in fixed capital totaling just $9 million. Yes, that's correct. Just 9 million New Zealand dollars, about US $6 million in the current exchange rates. In this way, the company not only does not need large lines of credit or to assume large debt commitments, but also the bulk of the profits it generates are in cash. What's more, thanks to the fact that it does not have to make huge investments in fixed capital and face all the associated costs, the company achieves an operating margin of more than 30%. That is, at the same level as the big technology companies in the United States. Basically, the only task of managers is to take care of the brand, develop markets, design marketing campaigns, and look for new ways to fuel demand. For example, one of the keys to its growth in China was that the company was a pioneer among food companies in exploiting the power of e-commerce, for example, via Alibaba. Anyway, this business strategy and the spectacular growth that its business has recorded is what explains the incredible increase that this company has had on the stock exchange. However, even having all the available numbers, if you think that its stock market evaluation has been a quiet riot, you couldn't be more wrong. During the last 5 years alone, we can see in the evolution of the stock price that on 3 occasions the share price plummeted more than 30%. Can you imagine being a shareholder and selling your shares for fear of failing even if the business was going so very well? It would have been hard. 16,000%. Take note though, because something similar happened to a former A2 Milk shareholder, the Australian company Freedom Foods. This company had 20% of the shares, however, after a frustrated attempt to take over the entire company, it decided to liquidate its entire stake in 2015 for just over 60 million euros. Today, just 5 years later, that same stake would be worth more than $2 billion, which is more than the entire market capitalization of the Freedom Foods company. So, be very careful in selling a good business too soon. Anyway, this is the story of A2 Milk, the company with the best stock market performance of the last decade. A company that is dedicated to a business as traditional as milk has managed to exceed the profitability generated by Silicon Valley's largest companies. I really hope you enjoyed this video. Please hit like if you did, and don't forget to subscribe for brand new videos. Also, this channel is possible because of Patreon and our patrons on that platform. Please consider joining them and supporting our mission of providing independent political coverage. And as always, I'll see you in the next video.